Hello friends, welcome to Sam and Sugar, and this is third part of income tax rules related to the stock market traders. And in the earlier two videos you must have seen me covering. First video I have discussed about this whole slate, if you remember, and in the second video I have talked about indirect taxes relating to security transaction tax and GST. In this video, this is the most important video, and this video covers the income tax laws related to stock market traders. Now I will be talking about futures, options and equity. If you're trading in equity, then any income from sale of equity shares will fall under capital gains. That capital gains will be long term or short term, and both have separate rate of taxation. Problem is not the capital gains or LTCG or STCG or the rate. Problem is what happens on the business income. Why equity shares, trading in equity shares suddenly forms part of business income? That is the main question many of the traders don't understand. Like for example, I have shares of a company. I sold it, say after 10 days or after 1 month at a particular rate. I made a profit of something, so that comes under capital gains. But when I buy and sell the shares of the same company on the same day, the same income, the income that accrues from that trade, is classified as speculation business income. So it is classified as business income. So any trading which is done, which is squared off on the same day, irrespective of it is margin money or not, if it is squared off on the same day, it is termed as speculation trade. And any trade done on speculation will fall under business income. So what are the items that are classified under speculation business income? One, if you are trading on a daily basis, intraday, then it will be classified as speculation business income. I'm talking about equity shares, purely equity shares, delivery based trading. And if you're trading on margin money, 100% it is under speculation, because that is not your money, it is considered as speculation. So any income from the speculation trade will be under business. It is very important to calculate turnover, because if your turnover is more than 2 crores from assessment year 1819, we are talking about 1819 now. So from assessment year 1819, if your turnover is more than 2 crores, then tax audit is compulsory. So you have to get your tax audit done, or you will get penalty of approximately 0.5% to 1% of the total turnover. So if your turnover is even say, like, let's say 2 crore 1 rupee, so if you calculate 1%, that comes to 2 lakhs. So that much penalty you have to pay. The cost of doing a tax audit may range from 20 to 25,000, and you have to do it from a chartered accountant who is in practice. Now whether tax audit is applicable to you or not is what we are going to cover in this video, and how to calculate. So in order to understand tax audit applicable to a stock market trader who is trading in equity, he will first have to calculate the turnover. Turnover is net profit or net loss on one trade will be treated as turnover. Now let's say I have company A, I buy and sell today itself, I made a profit of 1000. So 1000 will be my turnover. Next day I buy and sell of this company and made a loss of 1000. So 1000 will be my turnover. So net, my income will be 0, but turnover will be 2000 rupees. Okay, so this way you have to calculate your turnover. Similarly, in case of margin money trading, net profit or loss will be your turnover in equity. In case if you are trading in margin money and you have not squared off on the same day, then your entire sale value will be treated as turnover. So make sure to square off your positions on the same day itself, or the amount, the prescribed limit. You will oversee the prescribed limits and you will have to get tax audit done. Then the next aspect that we would be covering for turnover other is futures and options. In case of futures, net profit or net loss, irrespective of how long you are holding, is your turnover. In case of futures, net profit or net loss, irrespective of the term, one month, 2 months, 3 months. Normally, I think in India it works for 3 months. 3 months you can hold futures. So 3 months net profit and loss will be your turnover. In case of options, there seems to be unclear idea of what is to be taken. The book says that net profit or net loss from the option plus the purchase value is your turnover. So that is what they are saying. But in some income tax scrutiny that I have handled, the income tax officer has accepted only net profit and net loss from the options trading as turnover. So it depends on how you handle the income tax scrutiny. This area is a gray area. It's nothing is clear much on this aspect. It depends on case to case and how the assessee handles the income tax officer. So in the whatever cases I have handled, the income tax officer has accepted net profit and net loss from options as your turnover. But the book says that net profit and net loss plus the purchase value will be added as a turnover. So it depends. You can go for net profit, because the ultimate objective of us as a trader is to reduce the amount and be within the 2 crore limit. If you are above 2 crore limit, I would request all of you to get your tax audit done, or else there will be a huge penalty and interest coming on you, and it will be very difficult to go forward, no matter how big the losses are. But I would request you to go ahead and to get your tax audit done, because the cost of tax audit is just 20 to 25,000, but the penalty would be more than 2 lakhs. So it's better, it would be wise enough to spend that money on a CA for getting your tax audit done, rather than paying 2 lakhs later to the income tax officer along with other interest and penalties. Coming back to our topic and discussion on turnover. In case of turnover, if your turnover is less than 2 crores, okay, but still tax audit is applicable under section 44 AD. Now this is a very dicey section once again, which I had covered in one of my videos separately. If your turnover is less than 2 crores and your income falls above the taxable limits and you have not paid taxes, then tax audit is compulsory. Now try to understand this. Let's say I have an income, salary income of 10 lakhs. Okay, so I am above the exempted taxable limits. I made a loss in stock market of 5 lakhs. My turnover is say 50 lakhs, and somehow the income tax officer proves I have forgotten to add other income and it goes above the limit, because salary, obviously income tax TDS will be deducted correctly on the salary by the company, otherwise the expenses for that company is disallowed. So that much mistake won't happen, that the income tax is rest assured. So the income tax officer will he will get your bank accounts and try to locate a transaction where he can prove that this is the undisclosed income. And if you are unable to document or give a justification on the same, then that will be treated as an income. So let's say even if he proves even 1 rupee additional income to what I disclose, then indirectly it will increase my tax liability. So what happens now that section says if your turnover is less than 2 crores, say mine was 50 lakhs, yes. If my income is above taxable limit, yes, I am a salaried employee, I have a salary of 10 lakhs, okay, and you have not paid tax. For that, the income tax officer has proven that there is 1 rupee income on my bank on which I have not disclosed, due to which there is a extra tax liability. I have not paid tax. So this is again a gray area, and you need a CA to fight your case in this case. So in this cases, tax audit is compulsory. A lot of people have come to me in my earlier video relating to turnover. Okay, their turnover is less than 1 crore, which was the earlier limit, and still the income tax scrutiny had come. So only one case was there from Chennai. I told him to document all the proofs to the income tax officer for all the claims he has done. Since he was unable to document the proof, entire income has been added as an undisclosed income or to the income of other sources, whatever, and his tax liability has been increased, and now there is a penalty on him, even though his turnover was below 75 lakhs or 60 lakhs. I exactly don't know, but this was the case. So a lot of people have come to me and asked me this question. So only thing you remember, if your income is below the taxable limit and your turnover is below the turnover limits for tax audit, which is 2 crore from assessment year 18-19, then you need not worry about tax audit. So that was section 44AD for you. I have explained you in detail about turnover, and I have also explained how the income tax heads are used. If you're trading in equity, delivery based, then it falls under capital gains. If your holding period is more than 1 year, it's long term, still taxable, and below less than 1 year, short term, still taxable. And if you're trading on margin money or you're trading on daily basis in equity, then it comes under speculation business income. If you're trading in futures and options, it comes under non-speculation business income. 2 crore limit is on the turnover, which is including your speculation and non-speculation. So you have to club everything and then get the 2 crore limit. You have to see whether you are within the 2 crore limit. So I hope I have covered all the aspects from this speculation, non-speculation. I have cleared everything. I hope you guys know what comes under speculation and non-speculation. Turnover will be 2 crore limit is on the business income. Then what comes under long-term capital gains is equity shares, long-term and short-term. Then I have spoken about tax audit, turnover rules. Then margin money we have spoken, FNO. Turnover is 2 crore limits. So I guess we have covered everything from this board. Now what is left is how to handle income tax scrutiny and e-filing. So stay subscribed to our channel, because we are going to come up with more important videos. And if you have any income tax scrutiny, I hope I will be in a position to guide you to handle your own income tax scrutiny by yourself. And if not, then you can always contact me on my business ID, which is samandsugar18@gmail.com. Till then, bye-bye.